YouTube, Crypto Hobo here, back with another of my tales from the cryptosphere. And today we're basically going to have just a quick weekly roundup of events as they stand, with the closing of the stock market on Friday and the state of play as we head into the weekend. There's not a massive amount going on right now, and you will see this in the way that some of the news reports that are included today are conducting themselves, and the nature and the flavour of them are somewhat hyperbolic and sensationalist. The TLDR for this video and for the week: stocks are down, inflation is rampant, rate hikes are scaring everybody, and Bitcoin has lost its support at $40,000. If you want to find out more about all of this, stay tuned, let's do it. Now, the headline news really is the Dow Jones ploughing nearly 1,000 points in a end of week sell-off really, and this was spurred by hawkish sentiment from the Fed. The S&P 500 is also down, as well as the Nasdaq and also the FTSE 100. So we're going to take a look at those, and also we are going to look at the price action of cryptocurrency heading into the weekend. Okay, so inflation is pretty much still the dominant theme underlying all of this market activity. Mentioned in a previous video that the San Francisco Federal Reserve President, Mary Daly, was basically saying that the case has been completed for another interest rate hike, and it's suspected that this is going to be somewhere around 0.5% or 50 basis points. And the effect that it has had is that the Dow Jones Industrial Average is down, as I said, almost 1,000 points, 981 to be exact. This equates to 2.8% across the market. And this is actually its worst one-day drop since October 2020. Now, the S&P 500 also fell 2.7%, and the Nasdaq, which we've explained in a previous video, is a kind of tech-heavy growth stock predominant market index, also dropped 2.6%. Some of the more notable losses were seen in healthcare stocks, with HCA Holdings tanking 22%, Intuitive Surgical dropping off 14%, and Universal Health Services losing 14% also. The HCA CEO, Sam Hazen, praised their revenue for the first quarter, which came in at just shy of $15 billion, but explained a disappointing net profit of $1.3 billion on basically the higher than expected inflation and the effect that this has on labour costs. And so we can see that generally market sentiment is being increasingly dampened and dented and severely impacted by concerns that the Fed are going to aggressively have to attack this inflation problem, which they should be doing, but they're not. And ultimately, this is a concern that it will basically stunt economic growth and cause a recession because of the increased costs of borrowing through the hiking of these interest rates. On the converse side of this has had a knock-on effect with government bond yields actually spiking, and the 10-year Treasury note has been trading at about 2.92%, just short of 3%, and this is up from 1.5% at the start of this year and is close to the highest level since 2018. Bond yields are generally something to keep a good eye on, because an inverse of the bond yield curve has historically been a good predictor or indicator of looming recession. The reason for this is basically because it's a good indicator of the strength of investor sentiment and confidence in the short term, medium term and long term. So if you can get a higher yield on a short term 2-year bond than you can on a longer term 10-year bond or a 30-year bond, then this obviously shows that the investor sentiment and confidence kind of disappears the further along the time frame you go. However, one surprising fact is that so far, of the 88 companies in the S&P 500 that have reported earnings, 80% of them have actually beaten analyst expectations. And Tesla is actually a good example of this. Their stock jumped over 3% after they managed to deliver over 300,000 EV cars last quarter. And another example, surprisingly maybe, is United Airlines. And this spiked nearly 10% after this quarterly results showed a massive rebound in travel demand. Now this rebound in travel demand is also kind of interesting because it links into something that we discussed in a previous video, where Oxford Biomedica was the second biggest loser on the FTSE 350 last week in one day, and it only was second to a Russian-based firm also. So I did kind of these two things together kind of indicate this shift and transition to a post-pandemic world where economies are opening back up. And it's also reflected in the extremely dire performance of Netflix stock. And just a little update from the previous video on Netflix. On Wednesday, Netflix plunged 35% after really bad quarterly earnings being reported. And on Thursday, it fell another 3%. As mentioned in the headlines, this sentiment and pattern is kind of being reflected in the UK also, with the FTSE 100 index having a sharp drop-off on Friday. And this is predominantly put down to pretty weak retail sales across the UK, and also ties in to the Wall Street fall off due to worries of the interest rate hikes and the pace which this might occur. Now the FTSE 100 in the UK is basically the blue chip kind of index, and it was down 1.4%, and this was quite significant down on the day. And Michael Hewson, who's the chief market analyst at CMC Markets UK, he specifically and explicitly stated that this disappointing end to the week in Europe is intrinsically linked to Jerome Powell's comments during the week that the Federal Reserve may need to go much harder in terms of raising these interest rate hikes in order to combat the spiral in inflation. And we can see where this problem lies, right? There's weak retail activity in the UK, and this is creating a problem in the stock markets with stock prices dropping and falling. But that drop-off is linked to the fear of rising interest rates, but without the rise in interest rates, we have the high inflation, and the high inflation means higher prices, and this is generally going to deter people from engaging in strong retail activity. People are going to have to limit their spending. They have to prioritise food and energy over non-essentials. And you can see how this is just like a death spiral, basically, that's really, really hard to rein in once you've let it spiral out of control unabated for as long as the USA and the UK have done. In terms of the biggest loser for the FTSE 100, this would be B&M European Value Retail, SA, and this is down to 6.3% after a surprise announcement that its chief executive, Simon Arora, is going to be stepping down. In terms of consumer stocks, the poor high street sales figures has translated to B&Q's owner Kingfisher PLC falling 4.47%. The Premier Inn firm Whitbread PLC losing 3.81%. And Ocado Group PLC losing 3.62%. As is the case with all of these markets, where there's losers, there's also some winners. You know, even if the market is tanking across the board, there's usually one or two things in there which will be performing okay, or at least going against the grain somewhat. And in the UK and FTSE 100, this would be something like Rentokil Initial PLC, and that's up 2.06%. Whereas things such as defence stocks are also up, which is logical, given the current situations and tensions and conflicts in the world, which the UK is part of as part of NATO, as well as being an independent nation state, with the UK suggesting this week that they may be considering sending tanks to Poland to assist Ukraine. A slightly smaller gain, but a gain nonetheless, is National Grid PLC, and this has added 0.79%. And this figure is also reflected in gains made by Berkeley Group Holdings PLC after positive notes from their analysts at Jefferies. All of this has prompted Reuters to indicate that these slowdowns are warnings, basically, for a looming recession in the UK. And they also, again, in the headline and the title of their article, point to surging inflation. So moving swiftly on to the cryptocurrency news and developments. So on the back of this poor performance across the stock market on Friday, Bitcoin actually lost the $40,000 support level and has since been trading just under that at above 39,000 basically at the time of recording. Bitcoin stands at around $39,800. So we can kind of expect to see it maybe sit in this range. Maybe over the weekend it will retest the resistance at $40,000. But personally, I would probably expect this kind of bearish sentiment to continue throughout the weekend. There doesn't seem to be all that much investor confidence in the markets across the board. Everyone is opting to be a little bit conservative, which in my own humble opinion is extremely prudent, because we are not really at the bottom levels of the market in terms of cryptocurrency, and neither are we anywhere near the all-time highs. Based upon my own analysis and observations, and having watched this whole bull market cycle play out, which really sort of picked up speed in November, December 2020. The last major key level of support for Bitcoin, in my eyes, sits somewhere around the 28,000 and the $25,000 marks. And you'll see in my previous video that I mentioned the significance of these round number support and resistance levels, and also these kind of in-between investor-based psychological support and resistant levels. So 25,000 would be the round number figure for this, and 28,000 would be the kind of investor sentiment psychological level. Based upon how I observed the market rising, there wasn't all that much support built at 25,000. And so even though this is a key psychological level, I would kind of probably expect the bottom to fall out of the market pretty quickly if we went through 28. And it would really take some strong snapback to bounce off 25 and then regain momentum. I think if we hit 28 and sub 28 and start plummeting down 25, I think we would probably see 20 quite quickly. And then in terms of bull market cycle, that's probably us done. At least until other aspects of the global macroeconomic sphere and geopolitical sphere play out to their conclusion, and there is a better balance between inflation and interest rates. There's less conflict in the world, supply chains are restored, and consumer spending and retail confidence is restored, people traveling more. So we're really kind of looking at this upturn generally in order to facilitate a strong bullish sentiment, which would naturally feed into speculative investment opportunities. In terms of any significant cryptocurrency news, I guess probably the two biggest headline news. The first one links to this Bitcoin price. There's been lots of speculation being made as to whether Michael Saylor's MicroStrategy has been selling off some of its Bitcoin secretly. Now, Michael Saylor is very well renowned in the crypto sphere as being a prominent and fervent supporter of Bitcoin. He understands its potential as digital property and digital energy, and as a digital hedge against inflation. And he has traditionally and historically backed this up by putting his money where his mouth is. And MicroStrategy has actually held billions of dollars worth of Bitcoin on its balance sheets, on occasionally buying as much as 250 million to 500 million at a time. And so it's kind of thought that Michael Saylor secretly selling off some of this Bitcoin is one of the predominant drivers for forcing the price down below this 40,000 support level. For me, whilst there might be some truth in these articles, and I don't doubt that there are because I have the ability to do my own research, I do feel that they are rather scaremongering and clickbaity. In particular, I don't like the fact that they've used the word secretly here. I mean, MicroStrategy is a publicly listed company. Michael Saylor, as the CEO of that publicly listed company, has significant responsibilities to his shareholders, and also as a publicly listed company is required to file all of such activity with the SEC. So anybody can go and look up this activity because it's a publicly listed company. So to kind of suggest that he's doing anything secretly is a bit of a misnomer and a non sequitur as far as I'm concerned. And also, just because he might feel that right now is a time to shrink the balance sheet Bitcoin holdings a little bit, or to any degree, does not in any way change or impact or reflect on any sort of change of his overall bullish sentiment towards Bitcoin. And personally, I don't see there being any sort of conflict with Michael Saylor continuing to express bullish sentiment on Bitcoin, whilst also MicroStrategy selling off some of it in order to ensure short-term prudent financial health of the MicroStrategy balance sheet and to appease its shareholders. That's what a publicly listed company is responsible for doing. Now, the other kind of significant headline-grabbing news, I suppose, is a report published by Reuters which claims that Binance, the world's largest cryptocurrency exchange, has allegedly complied with the Russian government's request to provide it with user data, such as names of addresses, on the Bitcoin donations associated with Alexei Navalny last year. Now, Binance has responded to this late on Friday afternoon, and they published an in-depth statement on their blog, basically renouncing any of these claims by Reuters and really just expressing disappointment and surprise that a world kind of esteemed and renowned, trusted news agency, one that's considered to be, on the whole, generally more impartial than most media news agencies across the world. And they state that it completely contradicts the reputation that Reuters has built for itself over the years, and that it's not representative of of Binance's experience of working with journalists in the organisation. For transparency, Binance has actually published what it claims to be the full email exchange between Binance and this specific Reuters reporter named Angus Berwick, who published this article alongside another reporter, Tom Wilson. And in the interests of full and fair transparency, I'm going to put links to all of this in my video description down below. And in another article, it's transpiring this week that Binance are seemingly the kind of whipping boys of the news media report outlets, because they've also come into a lot of criticism for some activity they engaged in on the 20th of April, which is also known as the meme date 420. Now, Binance published a logo, and this logo basically looks suspiciously like a swastika. And they also posted alongside this a comment about gas fees. Now, some journalists who presumably don't have anything better to do with their time have extrapolated this and, from my opinion, have gone looking for a story where one doesn't exist and are just driving up controversy and trying to stir things up in order to generate interest for their own publication. they've made this tenuous connection that the 20th of April was also Adolf Hitler's birthday, and this somehow implicates Binance as Nazis. This is notwithstanding the fact that Binance is a Singaporean-based and listed company, and swastikas have been a symbol of peace and prosperity across Asian culture for time immemorial, much longer than they were used as a symbol by the Nazi Party, whom appropriated the swastika symbol from spiritual faiths such as Buddhism. Now, this has obviously gotten social media into a bit of a tailspin on this matter, and people are searching for, demanding explanations for why Binance would do such a thing, and calling for any interns that might have been involved in this to be fired, and that it shouldn't have passed checks. I think that CZ, the CEO of Binance, issued a statement basically apologising for the fact that this wasn't picked up on and that this could have been avoided. And personally, I commend him for making this politically correct kind of address to the situation, because it is a pretty damaging accusation to levy against Binance and its reputation, notwithstanding any specific individuals on the Binance staff. But for me, it's a nothing story. It's an absolute nothing burger, and it's just a case of people with very little journalistic, investigative integrity looking for a story where there isn't one, rather than doing some real investigative journalism. There's plenty of problems and hacks and scams and criminal activity in all walks of life, and crypto is no different to that. It's not external or separate from anything else. And there's plenty of real stories out there that should be written about, that clickbait-driven journalists are frankly too lazy to do their jobs properly. And moving on from that, Twitter has announced that it is going to integrate Stripe, which is basically a payments facilitator for cryptocurrencies, as a trial, in order for some content creators to now get paid for their content in USDC cryptocurrency, which is a US stable coin by Circle. These content creators have previously already been paid for their content in fiat currency via payment facilitator Connect. So this is an interesting development in the sense that it kind of shows that this integration of cryptocurrency, either as a replacement or substitute for current fiat currency payment rails, or as an optional parallel in tandem with traditional fiat currency payments, is really starting to be integrated into the mainstream. And Twitter have actually confirmed that Stripe are going to manage all of these crypto-related complexities and operations, and it's not actually going to require any code changes to the Twitter source code. Polygon, which is a layer 2 Ethereum-based blockchain, has announced that it is going to dedicate a $100 million budget for a new blockchain network which is going to be dedicated to Web3 development. This network is dubbed SuperNet, and it's intended to be an application-specific blockchain with enhanced efficiency, aiming to promote an ecosystem of activities centered on innovation on the Polygon network and Web3 in general. The co-founder of Polygon, Sandeep Naliwal, stated that the infrastructure tooling enables users to easily and quickly accomplish desired outputs. Polygon's mission is to accelerate Web3 adoption by providing companies with a complete range of blockchain solutions. Now, this is going to serve as a boost to the Polygon network, which already supports over 7,000 applications, or dApps, decentralized applications, and it has performed to date more than 1 billion transactions. And these dApps are basically self-executing programmable smart contracts which regulate network-based processes and logic, and it's basically a composition of distributed peer-to-peer apps that operate without the use of dedicated servers or any centralized authority to execute. And the last major update for today really is that there's been a new delay agreed actually between Ripple XRP and the Security and Exchanges Commission in the USA, the SEC. There's been a long-standing court case going on between XRP and the SEC, with the SEC filing proceedings against Ripple XRP in respect of potential infringements and alleged securities breaches. Now, this court case has been kind of rumbling on since it began in December 2020. For numerous different reasons, it has been facing a seemingly constant stream of delays. Most of these delays have been the result of the SEC applying for extensions. And on the 15th of April, the SEC filed a request for an extension of time to file its objection to the Magistrate Judge Netburn's ruling on the motion for reconsideration of the DPP ruling, DPP being the Director of Public Prosecutions. But this time, both parties actually did seem to agree with the delay in the timeline, and so this is something that's just going to keep rumbling on, I guess. It is believed that the outcome of this case is going to be pretty significant, not just for Ripple XRP, but across the board for cryptocurrencies generally. It's kind of hoped on the positive side that regardless of what the actual ruling is and what the outcome is for Ripple XRP, that in any respect it's going to bring some much needed clarity and certainty through regulation that allows all blockchain and cryptocurrency projects to kind of gauge where they sit in terms of being compliant with securities regulation in the USA. And the USA and the SEC having the kind of sphere of influence that it does, I would suspect that this is likely to inform and influence how other jurisdictions across the world tend to approach their own sets of regulation in terms of cryptocurrencies and securities law and all of this kind of thing. And yeah, so that is pretty much it for today. The state of play generally is that inflation grabs the headlines, rate hikes are scaring investor sentiment away, the stock markets are falling, crypto's lost its support, Bitcoin's lost its support at 40,000, and we're probably either going to sit in the trading range of 38,000 to 40,000 for Bitcoin over the weekend, or something is going to happen to maybe take a bit of a pushback and retest that 40,000 resistance. If that manages to occur and we get confirmation of that, we're probably just going to sit in the 40 to 42,000 until at least the markets reopen again for stocks on Monday. So yeah, that's it for me today. I hope you all have a beautiful weekend. Stay healthy, stay happy, peace, love, and prosperity.